A recession strikes the global economy once every 7 or 8 years on average, and another one will happen in the future. That's for certain. It's just a matter of when. When one inevitably does happen, though, what currencies do you want to be holding? Here, I'll tell you the 3 best currencies to hold during a recession. Hi, I'm Reid Kirchenbauer with InvestAsian.com, here on Nomad Capitalist. There are a few notes I should probably make before listing off the 3 best currencies to hold in a recession. Of course, there's different types of recessions. Some are inflationary in nature, some are deflationary. There's all sorts of different causes for recessions. So this isn't going to say how the next recession will be and what the causes of it will be based off of. There are different arguments for that, which I'm not going to get into, but this list is just going to be based on past performance. It's going to look at how certain currencies have performed, especially during the past 20, 30 years or so since the turn of the century, and thus how they're likely to perform in the future. Of course, as they say in the industry, past performance is no guarantee of future returns, so that's not to say that these currencies will hold ground in the future, but looking at history when it comes to currencies and their reputation and their track record of stability in the past is about the best you can do when judging their future prospects. I should also say that none of these currencies are going to give you high interest rates or any, not much possibility of a return on investment if you're simply holding them in the bank. Generally, currencies with a high interest rate are riskier, and ones with a lower interest rate are less volatile and will probably perform better in a recession. So this is less about investing and more about preserving your wealth. With that said, let's get started on the 3 best currencies to hold in a recession. The first currency on our list is the Thai baht. You might remember back in the 1997 Asian financial crisis that Thailand's economy was a main contributor to that crisis, and the Thai baht was among the region's worst performing currencies at that time. But Thailand's really learned its lesson since then, at least regarding its currency. Over the past 25 years, the Thai baht has been more stable, even compared to currencies that people traditionally consider storing their wealth in, like the Singapore dollar and perhaps the Japanese yen. The Thai baht stayed within a narrower range against the US dollar, the euro, other large currencies, stayed within a narrower range than even, Singapore dollar. So that's saying a lot. The Thai baht right now is around 32 to the US dollar. Very rarely it's gone down below 30 or above 33. So it stayed within a very narrow 10% band or so against major world currencies. Main reasons for this and the Thai baht's strong performance include the fact that Thailand's economy is very focused on tourism. During a normal year, there's more tourist arrivals to Bangkok than there are to London or Paris, so this keeps in a very strong inflow of foreign money that they're able to use as reserves and prop up the baht. Continuous flow of foreign currency is always good. Secondly, Thailand has a very strong trade surplus, one of the largest trade surpluses in the world, the 10th largest, I should say, but Thailand's economy is around the 20th largest in the world, so Thailand is a very large trade surplus in comparison with their economy, which has helped the baht's strong performance. I think that Thailand's tourism sector will revive after the current global situation's resolved, and I think the trade surplus will remain, which should help support the Thai baht well into the future. Second on our list is the Korean won, the South Korean won, which again, like the Thai baht, is increasingly looked at as an alternative. In Korean won's case, especially compared to the Japanese yen. Korea's economy is, of course, done significantly better than Japan's over the past decade or two, and Korean goods and products are increasingly being used in international trade. Of course, if you, 3 decades ago, people very rarely bought Samsung or LG or Hyundai goods, and now they're commonplace. So the fact that Korean products are being exported and sold all over the world means that the Korean won is increasingly being used in international trade. And again, like all currencies on this list, the Korean won has been very stable against other major currencies over the past 10, 20, 30 years, stayed within a very narrow band against the US dollar and euro. So the Korean won, also a great option if you want to diversify your currency portfolio. The third currency on our list is the Singapore dollar, which has not just been stable over the past 20 years, it's actually appreciated steadily against the US dollar since the year 2000 by about 20-30% in fact. So if you bought a bunch of Singapore dollars at the turn of the century, you'd be a lot better off now in terms of US dollars. Singapore is Southeast Asia's de facto financial hub. There's all sorts of family offices opening up in Singapore lately, all sorts of multinational firms opening up their regional offices. So there's very strong demand for the Singapore dollar. Singapore is also a great place to hold a bank or brokerage account if you want to trade stocks in the region, whether in Singapore or in some of Asia's high-growth frontier markets, places like Vietnam, Indonesia, Philippines. Singapore kind of acts as a hub for frontier markets to access capital and loans and private equity opportunities. So Singapore is a hub for all of Southeast Asia. Lots of great opportunities in Singapore, very stable country as a whole, and the Singapore dollar is a very strong currency. So if you want to expand your currency portfolio and denominate your assets in terms of different currencies, how can you do that? How can you buy and hold some of the currencies on this list? Well, you can just open up a Forex account and start trading them. That's one option. Also, another thing to keep in mind is that whenever you're buying assets in a country, whether real estate or stocks, you're probably buying assets. You know, you're not just investing in stocks or real estate, you're also investing in a currency. So if you're buying property in Singapore, that's denominated in terms of Singapore dollar. So investing in a country, unless you're investing in terms of US dollars or buying through an ETF listed in the US or something, that's one way to gain exposure to foreign currencies, is making an investment denominated in terms of a different currency. But yes, if you want to diversify into different currencies, either just buy those currencies directly or buy assets that are denominated in such currencies. Yes, those are the three currencies that are most likely to perform well in a recession, and thanks for watching.
Don't stop now. We've got well over 1,000 more videos here on YouTube for you to watch and learn how to go where you're treated best. And if you want to work with Nomad Capitalist personally, go to nomadcapitalist.com/apply, learn about our unique, tried and true process, garnered over years of experience, and learn how you can become our client.